If you look at the history of Comcast, Joe, they've understood two things, and Sky has really understood two things, and they've been the same thing. One is the power of sports, and two is the use of leverage. So let's take leverage first. We're in an environment where rates are very, very low. Comcast has grown consistently by acquisitions, not the least of which is NBC Universal, and they've always used leverage. The leverage ratios here relative to Comcast's history are very comfortable. The rates are low, so the cash flow coverage of interest is going to be good. So the leverage is not really a question. The management's confident in that. The second thing here is sports. And Comcast has understood sports. Brian's been interested in ownership in sports in Philadelphia for, I guess, decades now. Sky has understood sports. The thing that got Sky out of its problems was the acquisition of the Premier League. And I think Comcast is going to be able to take those rights and possibly do something with them. So you have the sports. Sky itself, when I got into it, Joe, it's hard to believe. It was losing £4 million a week, and now it trades for a multiple of over £2 billion, I think, of cash flow. That's pretty generous. It's very clear the price is full. The market realizes this. Everybody realizes this.
Yeah. Sky had a great year,
free cash flow.
Right? Sky had a great year.
Yeah, it's
up 39% in customer growth, earnings per share. And does it matter if it's accretive in the first year for Comcast for free cash flow? Is that a real number?
I think it's accretive for free cash flow, Joe, because in the satellite business, your capex are lumpy, and they're not in the business of buying the satellites. But I think the other thing that's going on is they're buying pounds at a very attractive level. Right. The UK, Ireland, Scotland economy looks great. Apple and Google are going to be investing a lot of capital down in the southern part of Ireland. Jobs are good. They have very, very strong competitive insulation there. I just spent a couple weeks over in Ireland and Scotland on vacation, and the satellite dishes are everywhere. I've always thought that it's a great asset. It's been very, very well managed.
Hey,
they've been very clever producing content. So if the stock goes down, then you buy it.
Is there any risk that Disney doesn't tender into this offer? And does it matter?
I think the only reason Disney doesn't tender into the offer is that they think the appreciation will over time be good, and that they can sell it later at
in which case, by the way,
a higher price.
Comcast gets to pay half and still control the asset. So that could actually, in a very strange way, be a better outcome, at least temporarily. But what would you prefer?
I think I'm a cash flow guy, Andrew, and I think owning the 39%, you don't own the cash flow. That's really what this is all about. Rupert wanted to buy all of Sky, and the regulators wouldn't let him. He needed to get all that cash flow. So I think Disney, sooner or later, is going to exit. I'm not sure whether it's sooner or later. Disney is not in a mood where they have to have cash flow, so they can be patient. And I think the market over time is going to realize this is a great deal. It also has a lot of scarcity value. There just aren't companies of this capitalization in media laying around waiting to be acquired. So this may be the last girl at the dance, if you will.
Hey, Larry, we just looked at Comcast shares. They're down a couple of % this morning. You said that you expected that, you anticipated that, but you also say that a lot of the short-term critics of Comcast management have been short-sighted and have been wrong in the past. What do you think happens here?
I think it's the same thing, Becky. I'm more confident about that than I would have been in the past, because I just think this Sky management team is absolutely the best. They have some technological developments. They've always been very close to or at the top level of technology in the pay TV business. They've benefited mightily from the productivity that's taken place in the satellites, and they're sitting in what I think is an economy whose strength is very, very underestimated by U.S. investors, and a currency that's depressed because of the Brexit uncertainty. So I don't see anything for Brian but upside here in the currency, the perception, and then
Right.
I think the thing that you can really take to the bank is that sports over time are just going to be enormously valuable, and of course sports rights are
Larry,
scarce
one
assets
piece of the
as well.
thesis that I think doesn't get enough attention, and I'm curious if you think that actually there's real revenue that can be generated as a result of it, is actually how much of the NBC Universal content can ultimately get pumped over the Sky distribution platform, given that, frankly, I don't believe, I hate to say it, that this network, for example, is running over Sky right now.
I think the answer to that is a lot, and over time, Andrew, the capacity of the Sky network has grown. I think when I got into it, they had maybe 8 channels, and now I'm sure it's in the over hundreds. Although I haven't looked at what the typical Sky customer can access. But I think that's really a minor part of the game. I think what is going to be powering this thing is one, the strength of the UK economy, 2, the competitive position of Sky within the economy, and 3, the fact that I think the pound is way more depressed than it should be because of what I think one way or another is a Brexit situation that's going to get resolved. And then 4, if what you say there's much potential, I think that's a bonus round. But Sky has always been pretty good at procuring rights, and they have a lot of American TV rights that are available there on Sky.